Hello trade pros, welcome to yet another video here on our YouTube channel. I hope everyone's doing well, and in today's video what we're going to be talking about is maybe something that a lot of people actually look for and are looking for the right answers to, and that is how I combine trading indicators to day trade stocks. And you can use this to day trade any other asset, but I'm going to be showing you what I do specifically, how I combine all of these things to develop a strategy. Now, before we get started in this video, I want you guys to smash that subscribe button, hit that like button, and ring that little bell to notify you when we do drop videos like these and when we do go live. So in today's video, we are going to be going through pretty much everything you guys see on this Apple screen. This is a trade that we took in our live trading room that yielded about 70 to 80% return. I can't remember, it was somewhere in that area. So if you want to get updates like those and you want to trade with us in a live room setting where we explain ideas and trades, check us out at TRADEPROacademy.com. So let's go through this intro and we'll get started. So we should be talking about volume as the main indicator. Now, before we dive into this, I'm going to be breaking down the following three things. Number one, the importance of combining indicators. Number two, why some combinations do work better than others. And number three, which combinations I use and when I use them. So I pretty much use a very simple model overall in terms of indicators, I would say. I don't necessarily consider everything you see here on the screen an indicator. I consider only bits and pieces indicators. So I consider volume just the tool, because this isn't really an indicator. It's just a tool that represents raw data. I consider this volume down here more a tool. And then something like an indicator for me would be these averages and like maybe the pivot points, right? So if we break down exactly what we've got here on my trading view screen, you can see I've got a leading EMA cloud, which is a 3450 EMA right here. So the short band is the 34, the 50 is the longer band, and it's the blue and red ribbon here. I can get rid of this one. I've got an EMA, just a simple EMA, which is a 20 EMA. I've got volume at the bottom here. And what I typically do with the volume at the bottom is I'll consider the volume moving average so I can kind of compare to the overall volume on the session as it comes in. That's important. And then what I'm going to be using is volume profiles, both session volume profiles and visible range volume profiles on TradingView, and also pivot points. And these are just going to be the traditional pivot points. So what I do with these is I consider sentiment and I consider volume profiles and levels. So EMAs, if you live and die by the EMA, you might get killed. You have to use these more as sentiment drivers, and they're secondary to price and to volume profile. So it is important to combine multiple indicators together, because what that does is it creates a qualification process. What I mean by a qualification process is that you can combine 2 to 3, 4 tools, right? Typically, I say 3. If you can get 3 things that give you a quote-unquote buy signal or a sell signal, right, and then those are your qualifiers. That's what you want to use when you're trading with indicators and you're combining things. The importance of combining them is that you have 3 things that tell you yes, and if one of them maybe tells you no, then you shy away from it, right? So it's really important to have those 3 things in your plan to build that consistency. Now, for me, the 3 things are going to be volume is going to be the main one, right? Because when I look at the volume profile here on the side, I can get my levels. So the volume profile on the side, the work is already done, right? Its work is done at the beginning of the session and even throughout the session, where I can see these like volume notches, right? That's one thing. I get my levels from those areas, right? Support resistances, where we can identify where price goes from big volume to small volume to big volume, for example. So I drew right here a ledge, which happens to be the ledge of not the prior day, but the day before that. you can see where the resistance is. So when resistance breaks, it turns into support, right? So this is a key area. We can consider that one of the indicator tools. Now, the next step is I'm going to watch these averages, right? Yeah, you can hold the averages and play along the averages, but the best way I like to use it is a sentiment driver. So if my sentiment is bullish, I want all price to be above all of the averages, right? So if it pulls back to the 20 EMA on a 5-minute chart, that's considered a good area for a pullback. Now, that also has to confirm with where the level is and also the volume drop off, right? And then the third step here is going to be volume. I can add the pivots as a fourth step, but the third step is always going to be volume. So let's break this down as simple as possible. Number one, structure. We identify what kind of trend we're in. So we identify where the key support resistances are, both by looking at the price structure and both at looking at the volume profile. Because, for example, we have a ledge here, right? We have a very aggressive top, and we've got a ledge right here, right? So what that means is this area is going to be a good support resistance. If we break through, we're going to see a move into the next volume node, right? Which is going to be somewhere in this vicinity. So that's step number one. We've done that. And then we want to ask ourselves, are we above these averages, right? Are we going to be above these averages? We open up, yes. Okay, great. If we pull back to the average, will we still be above all of the averages? Yes. Are we in our zone of interest? Yes, right? So 2 out of those 3 qualifiers have been met. So we've combined 2 of those 3 indicators. Now we could throw another one in, right? We could say R1, because pivots act as support resistance areas depending on where they're at. R1, are we holding support? Yes, okay, that's 3. But I don't consider the pivot that big of an area. I want to make my next qualifier volume. So nice big candle on good volume. What's this red candle doing, right? Red candle drops on weak volume. Nice pop on strong volume. If you want a little more confirmation, why don't we go to the 2-minute? Look at that, right? Volume is starting to increase to the upside. That means this is a long idea. We've combined our 3 indicators, if you will, and we're going to get long. Now, as we continue to push, notice where volume drops off. Again, we had this key resistance area. So the idea here is, can we break and retest this area, right? Resistance turn support for the long side, right? Are we above the averages? Yes. Okay. Did we make a move on strong volume through the top? Yes. Right. Is the volume on the pullback weak? Yes. Okay. Great. So we can look at this area and look to start buying this. Now, another qualifier that I'm not going to tell you too much about because we're going to have a great series on it is order flow. If you want to learn options order flow, this is the right place. In the coming weeks, we're going to have a lot of amazing content for you guys and a special surprise. But options order flow, we saw a lot, and I'm telling you, a lot of Apple calls coming in. We have nearly $64 million in premium on Apple calls, the biggest options flow on the day. So that was one of the qualifiers, right? I'm going to show you guys how to trade with order flow. If you guys drop some comments down below, we'll show you everything how to day trade. But I'm using indicators only today. And even just with these indicators, we could find that opportunity. Now, look at this most recent trade, right? Where do we pull back? We pull back into the volume ledge that had been created today, into the 5-day moving average, right? Volume to the downside was heavy. You can see down here was heavy, but then dropped off aggressively. So now we're looking for the longs, right? We could have bought it somewhere 147.30, and it's already up like 20 cents. This doesn't mean this has to be a huge, great mover that's going to skyrocket right now, but it is an opportunity for us to be looking for that long based on the qualifiers that we had combined together. So if you are going to combine multiple indicators together, I highly recommend that you have volume in those or some kind of order flow or some kind of tape reading, because that is going to enable you to get that edge and understand where the buying is strong, where the selling is strong, where the selling is weak, where the buying is weak, right? So have a combination of something with volume profile in it and volume, and then you can add whatever other indicators you may like. So when it comes to just using moving averages, stuff like that, like I'm not that big of a fan. RSIs, MACDs, oscillators, I just throw those out the window. Not a fan, don't need them. They don't provide that much value. They're kind of delayed, but if you have a strategy that combines them with volume, then you might have something good on your hands. So this is the way I do it. This is the way I combine my indicators. And those are the exact steps that I like to use. So if you guys enjoyed this video and you use these indicators, drop a comment down below, hit that like button, and remember to hit that subscribe button. I want to hear from you guys, and let us know, are you excited for the order flow video, how to day trade with order flow? I'll see you guys next time.